Hey guys, welcome back to Sensor Sense. My name's Evan. I want to bring you a video that's a little different than my normal videos today. This video is going to be talking a little bit about real estate. There is a not very well known deduction that people can take, or exemption, in which you sell a home and you have a capital gain on that home. So let's say you bought a home for $250,000 and 10 years have gone by and now it's worth $500,000. You would usually owe capital gains on your home of $250,000 when you sell, because that's the amount that you've gained on the home. A lot of people don't realize that if this home is your primary residence and you're single, you get a $250,000 reduction in the amount of capital gains that you have to pay on. And if you're married, you get a reduction of $500,000 in capital gains that you'd have to pay on. Now, there are some exclusions, there are some rules to this. The main rules are that you have to have owned the house for at least 2 years and have lived in that home as your primary residence for 2 years. It's a little bit more complicated than that. It's based on a rolling 5-year period. So as long as you've lived in that house for 2 years of the previous 5 years, or any portion of the previous 5 years that adds up to 2 years of full primary residence for that home, meaning that you actually lived in that home, it was your primary residence. You can have other homes, you can have other condos, things like that, but you have to have declared that home as your primary residence for at least 2 full calendar years in a 5-year rolling period of time. Then you can obtain that basically tax-free money from the sale of the home. One of the things I was reminded about today via a video that I was watching was that a lot of homes are now worth significantly more than they were 10 years ago, in the sense that most people are selling their homes for a higher gain than $250,000 to $500,000. And this really hasn't been a big issue for most people until very recently. This law hasn't been changed, I think, since 1997, if I remember correctly. And so it hasn't really accounted for inflation. So one of the things that the author of the video was discussing was the importance of you keeping your receipts and your records for all the upkeep that you make on the home, for renovations and major upkeep, such as replacing your roof, such as putting in brand new cabinetry, adding things that are beneficial to the home that increases its value. A lot of routine maintenance is not going to be able to be excluded. But in a lot of cases, if you do a major renovation to your home, say you put $100,000 into your home, and it involves a lot of cosmetic things, and it increases the value of your home, you will be able to deduct that as well from your original cost basis of your home. So in the example we talked about at the very beginning, if you had a $250,000 home that's now worth $500,000, and you go to sell it, you can deduct that $100,000 renovation project if it can be considered something that you're adding value to the home. And I would say that you need to definitely consult a CPA. You definitely need to consult a tax advisor, maybe a real estate lawyer for these particular circumstances. It's well worth getting advice about these things before you go to sell, because it can save you a lot in taxes if you do it the correct way. So the big takeaway is, if a home's gone up tremendously from, say, $250,000 to $1 million in the last 20 years, which is happening to a lot of individuals in the United States, normally you could get a $250,000 or a $500,000 reduction, depending on whether or not you were single or married, on that home when you go to sell it. You're still left with quite a bit of taxes owed, especially if you're single, in a situation where you paid $250,000, you're selling it for $1 million, you're netting $750,000, and then you're getting a $250,000 reduction in the capital gains that you owe. You still owe capital gains on $500,000. That's where keeping these records, keeping the receipts, is really important for you. It could save you thousands, if not tens of thousands of dollars in taxes. And that's what I wanted to point out today. It is not something that you hear talked about a lot, but I would think that given this market and what we've seen, if you're having to sell and move on to something else, it's something very unique to think about, and as a good reminder to keep your records for as long as you possibly can for those big projects. So again, my name is Evan. This is Sense or Sense. I wanted to bring you some unique coverage today on a topic that I thought about and saw a video about. And I would appreciate it if you could smash that like button, subscribe. I'll be bringing out a lot more videos about credit cards and other topics that are beneficial to you financially in the near future. Thanks again. Bye.